You can't build a book of business on small business alone. So let's talk about what I call the sweet spot. The next stage to consider is writing medium-sized businesses in order to help build a solid workers' comp premium book. While a small business helps to build your policies in force ratio, you need the medium-sized businesses to help the premium volume build within your book. These types of businesses produce premium anywhere from $15,000 to $50,000. Medium-sized businesses are the ideal premium size because you're staying under the radar of the big insurance retailers that want large business risks. And because of this, they generate a better retention ratio in your book of business because of the experience mod, which we will touch on later. You need to balance your book with these size businesses as it becomes more competitive and profitable for you. Medium-sized businesses in general incur a lower loss ratio, but that's not always the case. Companies of this size have the potential to have a lot of claims when they grow, especially when there's poor supervision. In addition, this premium range is when their first experience mod is assigned, and it typically, when it's initially assigned, is a credit, resulting in premium savings. For those who need a refresher, anything above 100 is a debit, and below is a credit. Since the claims activity seems to be more stable in this $15,000 to $50,000 range, more often than not, the experience mod is going to be on the lower end. While they do incur a lower loss ratio, I do want to mention it's really important to keep an eye on the insured's claims activity, and we do encourage brokers to order loss runs at any time throughout the policy. Since claims are reported directly from the insured to the carrier, you're not notified that a claim has occurred, and nobody likes surprises at the time of the renewal. Although middle business submissions require more work than a small business, they're not as much of a headache compared to a larger business. You typically won't see non-renewal notices, which can occur due to a class of business no longer being written by the carrier, or a major debit on the policy due to the experience mod. So this is the perfect sweet spot in between the small and large. So it's important to be smart about writing any coverage, but focus on the businesses that are doing well. And here are some of those middle-sized businesses, these target classes I have found to be stable and competitively priced. Just like small businesses, knowing your markets well helps ease the quoting process as you know which markets to look to when quoting medium-sized premium. Some of those I've seen as of late are bars and taverns, restaurants, schools, hotels and motels, property management, apartment, and condo operations. Writing middle-sized businesses are imperative to effectively compete in the workers' comp arena. We're going to go over a medium-sized business case study, and again, I'm walking through those highlighted factors that are important when quoting a risk. This business is a restaurant in California with one location. They're a corporation, so I would check on the California Secretary of State to confirm the owners of the business. Their payroll is just over $500,000 with close to 20 employees, resulting in premium of about $26,000. I'm looking at all the key factors as I would a small business risk. However, what differentiates this is I'm reviewing the risk summary in more depth as there are claims, and this is experience mod rated. We talked about small businesses where there's no negotiation in premium. Well, with middle-sized businesses, discount credits can be applied given the overall quality of the risk, taking into consideration payroll, years in business, claims history, and experience mod. So always see what's available to your insured when quoting a medium-sized business. As I mentioned before, middle-sized businesses usually have an experience mod under 100%, and our case study is rated at 92. While the experience mod is at 92%, this is where I would encourage you to keep an eye on the claims activity throughout the policy, because in a year's time, the experience mod can easily go from a credit to a debit. So having frequent conversations with the business to check on the supervision and hiring practices within the company will help the insured stay under 100%. The WCIRB is the one who determines and assigns experience mods by comparing the losses of one company to all the other companies in the same industry that are in similar size. So for our example, based off Coastal Foods payroll and claims history, the business does qualify for an experience mod rating. So from review of the submission to quoting with the carrier, we were able to bind this risk on the third day.